Hello, good afternoon. I see some of my friends say they can't hear us. Can you hear me now?
I can hear you, Sarah. Hi.
Hi. Okay, perfect. Okay, everyone can hear. Okay.
Can we start?
Yeah, we can start. Let's go ahead.
Hello, good afternoon.
2:30.
Yeah, hope everyone is having a great day. Thank you for joining us. My name is Farizal, and I'm a corporate partner at RDS. Today's topic is basically reinvestment allowance, managing document requirements for tax incentives. With me is Saravana Kumar, one of the founding partners of RDS, head of the tax, customs, and incentives practice. Sarah represented TNB in the recent High Court case against LSTN involving a huge sum, 1.8 billion. This is one of the biggest, if not the biggest, tax case ever in the country. So during the session, we hope that maybe Sarah can tell us a bit about what actually happened in this case. I'm not sure whether the written judgment is already out yet. I've not read it. Maybe Sarah can tell us the issues raised by the authorities and what were the documentation requirements that was involved in this case, and whether there's any advice or whether there's any input that we want to make here, and maybe touch a bit on the role of expert witness in tax cases. And if you have any questions, please feel free to drop your questions at there's a link at the bottom of the screen there. Please feel free to put your questions there, and we'll try our best to actually answer your questions shortly. Without further ado, I will let Sarah take the floor.
Thank you very much, Farizal. A very good afternoon, friends, and good to see you all again. We now start our webinar series for the year, and this is the first session of the year. In fact, I didn't want to do tax first, but all my colleagues insisted that we should do with this case first, and there we are. The client's request was to discuss incentives. In fact, there are two major cases that we won last month when it comes to incentives. One is for, of course, the TNB case on reinvestment allowance. One of the many first cases for TNB here, 1.8 billion ringgit. Another case, I shall not mention the taxpayer's name from East Malaysia. The investment allowance. We claimed successfully investment allowance for the entire expenditure that we incurred to construct a power plant. Can you just check, Zarif? Someone says they can't see my visual. I hope you all can see me and no other issues now. So there we are. But anyway, as long as you can hear, I'm happy. Now, what I wanted to start off by giving the background of these two cases. The first is the RA case of TNB. What happened was Tenaga Nasional claimed reinvestment allowance for a large sum of money, billions of ringgit, for the capital expenditure they incurred for some of it, not so much for construction of power plant, but the renewal work they did on the construction plants, improving what they already have in terms of the plant, and of course all the transmission assets. So they then claimed RA for expansion, modernization, and automation of their manufacturing activity. Now, IRB took the view that TNB can't claim RA simply because they said you are in the service industry. For the IRB, TNB is a service provider, and therefore IRB said you must go and claim under Schedule 7B, which is approved service provider, and go and get an incentive there. Now, we had a bit of an issue to go under 7B simply because you need a prior approval of the Minister of Finance to go and claim the incentive. That's number one. Number two, it is a 5-year claim, right? The ASP RA for Schedule 7B is a 5-year claim. Whilst under Schedule 7A, you don't need prior approval of the finance minister or anyone's approval for that matter, and you can claim for 15 years, right? So that's the minimum you can claim is 15 years plus all the extensions given by the government in various budgets. So it was no brainer that, you know, taxpayers prefer to go and claim under Schedule 7A. So we produced various authorities in court, including a federal court decision that says TNB is a manufacturer of electricity. Of course, IRB's legal counsel was not so concerned about the federal court's ruling. They were saying, you know, it's all per incurium and so on. But the High Court was very clear that the federal court decision on this point is so clear that, number one, TNB is a manufacturer of electricity. Not only Malaysian federal court has said this, the House of Lords in England, the Supreme Court of Canada, the Indian High Courts, and the Australian High Court all have ruled that manufacturing of electricity is a service, is a generation of electricity, is a manufacturing activity. So there are no cases in the Commonwealth that says that the activity of generating electricity is a service. Only the Malaysian Inland Revenue Board calls it a service. Courts all over the Commonwealth and Malaysia says no, electricity is a manufacturing activity, manufacturing of an article. Although it's intangible, it was an article, right? So that was our first argument. The second argument by the IRB was that, oh, you know, you are essentially a utility company. And it is where we argued successfully, and judge accepted our argument that it is utility for the consumer. But for my TNB, from their lenses, they are, as far like any other business, they're providing a product. They are manufacturing a product, they're creating an article in the power plants, and they are transmitting it to our homes, and they're essentially selling a product. It is utility bills, as we call it. So just because a consumer call it utility, it does not mean the manufacturer is bound by the description used by the consumer. And the final argument raised by the IRB was that, you know what, they said that RA is only available for new product. Okay, this is what the Senior Remedy Counsel argued. I don't know where, you know, how they look at the law. They said RA is only available if you have a new product. I didn't say much in court when she said that, because I just stood up during reply and showed to court the EPS form, the borang allowance program similar. If you look at the borang itself, it says existing product. Yeah, the amount you have spent to expand, modernize, or automate existing products. So the IRB's argument now in court to say it all refers to new product is certainly an illogical argument, because their own documents don't support that, right? So it is on this basis how we succeeded. Grounds are being prepared, because Revenue has decided to lodge an appeal to the Court of Appeal. Grounds are being prepared, but it goes to show that Revenue takes a very narrow view when it comes to allowing incentives for not only reinvestment allowance, but for many other incentives, right? And the other sympathetic argument that they were trying to raise in court is that, oh, we have already given them capital allowance, right? So because of giving them capital allowance, they cannot be asking for reinvestment allowance, because then they get another 60% of what they spend. My reply to that was, that's too bad, that's the law, right? There's a case that I did, the first RA case in Malaysia, Success Electronics. The courts have made it very clear that CA, capital allowance, is a different incentive. Reinvestment allowance is another incentive. There are two different incentives, right? The mere fact I enjoy CA does not automatically mean I cannot enjoy RA. If I'm entitled to it, I can go and claim for it. So the court accepted our argument. And the other argument IRB tried to corner us is to say that there's a definition of manufacturing. And we said that definition doesn't apply to us, because we started claiming in 2003. And in 2003, there was no definition of manufacturing. That definition was only introduced in 2009. Remember, it's a 15-year-old claim. If I start claiming in 2003, I get to claim this for 15 years, right? You cannot introduce a definition in the middle of the claim and then try to bind me on that. No, right? The court also agreed that taxpayer enjoys vested rights. The law as it stood at the time the claim was first made, that law continues to vest with the client, and the client gets to claim based on the original law. So that was the argument. And of course, for those who are familiar with the 2012 prescription of activities precluded from manufacturing, the Minister of Finance in 2012 has issued a gazette order listing 20 activities as activities which cannot be subjected for what we call reinvestment allowance. They are not regarded as manufacturing. Example, photocopying, manufacturing of ice, cutting cardboards, baking, and so on. So we were able to show that if the minister intended to restrict the claim of RA in this regard, a minister could have also said electricity is excluded, but the minister did not do that. So IRB had no answers for this, and on that basis we succeeded. So that's the first case that we succeeded. The second case that we succeeded slightly earlier, about a few weeks earlier than that, is a case where the taxpayer built a large power plant and at the time the taxpayer built the power plant, applied to Minister of Finance, at the time of about to construct, got an approval for investment allowance. Got a special approval for investment allowance, where the allowance can be, if it cannot be utilized, it can be carried forward indefinitely. Okay, so if it takes you 30 years to claim the incentive, it takes you 30 years to claim it, right? So taxpayer was granted investment allowance on the monies he spent to build this power plant. You're talking about hundreds of millions of ringgit, nearly R1 billion, okay, worth of allowances were approved by the finance minister at the relevant time. The client's approval was in 2015, okay, and they anticipated at least 24 years to utilize this claim, at least 24 years to carry forward this claim. Come 2018, for no good reason, the new finance minister at the relevant time bulldozed, that's the word I will use, bulldozed an amendment to the act and said, oh, if you are enjoying these incentives, it is it's going to be a 7-year limit. You can't claim it within whatever you have, which you've not claimed beyond the 7 years, you can't claim it. Too bad, hangus. Okay, you don't get it anymore, it's burnt. Now, taxpayer writes to him and tells him, Mr. Minister, this exemption, this 7-year rule shouldn't apply to me because I had already applied earlier and I have already enjoyed a unlimited time frame to claim. And therefore, the time frame shouldn't apply to me. Okay, so taxpayer said on this basis, we shouldn't be entitled to the 7-year restriction shouldn't be imposed on me, and asked the finance minister to extend the limitation, remove the limitation, and allow us to claim this indefinitely as how it was originally granted. Minister replies and rejects the application. Of course, minister being very powerful, all ministers from all different governments, we have had 3 governments now, so all different government ministers have one thing in common, they don't give you reasons, right? So in this case, it was the Pakatan Harapan finance minister, he gives no reasons, also gives you a letter, permohonan tuan ditolak. Okay, then we file a judicial review application against the minister himself. Then he writes an affidavit and says, oh, I didn't give it to you because this is not a matter of strategic importance. Okay, it's not a matter of national strategic importance. So our argument was 2 arguments in court. Number 1, the law does not require this concept of national strategic importance. Minister has no business, no power to come and coin a requirement to be imposed. This is a new trend we see among our ministers, that they like to go and impose new requirements because they think they're parliament. They're not parliament, yeah? So we say, listen, you have no business imposing this. That's the first argument. Second argument is vested rights. right? Because at the time I applied for the incentive, when I was given the approval for the incentive, there was no such thing as a 7-year rule. It is indefinite. Okay, and therefore IRB has no business later amending the law. Minister has no business amending the law to come and say it is going to be only for 7 years. So we won on that point, and the court ruled that the Minister of Finance has no business to restrict the taxpayers' reinvestment allowance claim. So these are the two recent examples I wish to share with regard to income tax. If you think income tax department is interesting dealing with them, then you then want to go and let me share with you about customs. Customs are equally interesting as well. We had a case where the finance minister has given our client who is a manufacturer and importer of luxury European cars in this country. You may read about this case in the papers. And what happened was, minister said all your cars of this particular model is exempted from duties, right? Both excise and import duties. Now, minister says this particular class. Of course, when the cars were brought into Malaysia, the minister said up to 1,200 cars will be given this exemption. Now, those who are familiar with the car sector will know, in that category of class, example, say E class or S series or whatever series, there are many variants, right? They can be a 2.0, there can be what we call a hybrid version 3.0, you know what I mean? There can be a different kind of engine, they call it different. There are various variants of the same model of the car. Yeah, and I'm sure you see this in many cars, there's different CCs and different type of engines and variants, right? So customs took the view that only the car with a plain number, plain model will be allowed, the rest are not allowed. But if you read the finance minister's exemption letter, it's so clear, sumo model, okay, dalam series ini. So they disallowed and asked clients to pay taxes on disallowed incentives. We went to court, we filed for judicial review against the customs, and the judge asked customs, what's your logic? Because the minister has given them a blanket exemption, a very wide exemption for that particular series. And fortunately, judge was familiar with cars, so he said, yeah, that's very common. That car got many variants, but they all are the same series. And what happened then was the customs said, oh, they imported too many cars. So we were able to show to judge that our approval is for 1,200 units, and whatever we imported to Malaysia thus far were within the 1,200 units quota given to us. And on that basis, we succeeded in this matter. But eventually, finance minister interfered and instructed the customs department to withdraw the bill of demand, i.e. the additional tax assessments. So you can see that both these departments are fairly aggressive when it comes to incentives. Okay, so this is what I wanted to share in terms of case law, how our courts are dealing and looking at this kind of issues. Okay, now next question is, how do you then manage this kind of claims? I think this is what we want to discuss. What are the documents that you require when it comes to claiming these tax incentives? Ladies and gentlemen, don't worry, my colleague is listening to this conversation, to my presentation, and is typing out my notes as I speak, is that the law imposes a 7-year requirement to keep documents, both under the customs law and also the Income Tax Act. First point for you to take note, please retain those documents for 7 years. No excuse whatsoever, unless your warehouse or your office, suffers a fire damage or flooding or something like that. But if there's no other reason, you got really no choice but to keep for 7 years. Yeah, that is the law. Please, you got to document it, you got to PDF it, scan it and keep it, right? That's number one. Number two, there is an art of retaining these documents and detailing out why we spend this monies for. So if you spend ringgit 1 million to go and buy a machine, and mind you, these are all billion-dollar claims here, yeah, hundreds of millions and billions of ringgit worth of tax capital allowances being incurred throughout the country for various projects. Your document not only have to retain the invoice, okay, if the supplier is giving you invoice, we must also retain the payment evidence, whether receipt or bank transfer or whatever it is. You need to keep that. Also get it scanned. Third, what did you buy? Okay, try to keep a photograph of that item if you can, and also the description of that item, and also make note in the report, usually in your procurement order, when it's a request from the engineers or your operation people. Please, I've revised all these forms for my key clients. I said, please put in the reason why you're acquiring this machine and how this machine is going to expand, modernize, or automate your business. We essentially duplicate the RA form in a very simple, smart way where an engineer can just fill up and give explanation. Why? Because tax issues can come and haunt you much later, and if the engineers have retired or not around, it can be very difficult for your group tax and group legal to justify the purchases. Right? Because you must be very, very smart in the way you retain these documents. You know, it is a bit more tedious, but if you get it done once and you do it properly and neatly, you record it and keep it, it can be so easy moving forward, because during audit, all this can be given to the revenue and say, listen, you want more, I can give you. In TNB's case, there are thousands of boxes of these documents. And once the IRB knows you got all these documents, you got a complete set, they will leave you alone. They won't even ask for documents, they'll accept documents in order. But when the documents are not in order, that's where the hunt starts, because they know you don't have it. So the way you keep your documents is not merely, number one, keeping it for 7 years, but must also record it in a smart way. Why are you incurring all these expenses, and the reasons and the purposes for these expenses? That is very important, right? So that is what I wanted to highlight on the importance of documentation. And from my experience, if they cannot hit you on the technical point, they'll go after documentation. In the customs case, we were able to show all the cars that we brought into this country. We exhibited them in court, now affidavit. And they couldn't do anything about it, because judge was able to tell them, listen, they have all these documents, so you please tell me, where did they go wrong? And that's why we cornered customs in the car case. So please take note of this. And final point, when it comes to claiming incentives, it would be the role of expert witness, both from the technical aspect and also from tax angle as well. Tax angle is straightforward about your treatment claim, your processes, when you start claiming, how you are claiming it, and etc. Yeah, they come and explain to you the position of the company and so on. It is the technical expert who is also equally important, because he must be able to show technically must be able to show to court that these dollars were spent, well spent, and how they help to function in the taxpayer's business. If you tick or claim it as automation, how does it automate? What was there before? So what is the enhancement to the business from here? Do you reduce your time frame? Say it takes 2 minutes in the past, now you take 90 seconds, or all those things are efficiencies. I remember doing a case for a glove manufacturer claiming RA for a dryer. We argued on automation and modernization, because the machine dries up the gloves earlier than the previous machine. That we said modernization, because it helps us to dry the gloves quicker. That means we can manufacture them quicker, and therefore we make extra dollars. So all these things will be quantified. So when you're claiming reinvestment allowance, make sure your documentation is robust, where it will enable you to quantify the modernization, the automation, or the expansion that you incur in relation to RA or any other incentives for that matter. It is very, very important, because in some of these cases I see when the revenue come and ask for documentations, that's where taxpayers panic, because number one, they never kept documents for all these incentives over the years. Or if they've kept, it is not given, if not kept properly, it is just gone, what you call it, just everywhere. And when you ask what is this machine for, you guess what is it instead of knowing what it is for sure. So these are the factors that you must consider, because that's where the expert witness comes, and the expert witness be able to explain the role of all these items in business, and they can, I'm sure, withstand cross-examination by the IRB. So these are the three things I would like to emphasize based on my recent experience in the TNB and the investment allowance case. Essentially, you must keep good documentation, very good explanation with regard to the expansion incurred or money spent, so that the business case can be easily articulated and presented. And finally, always earmark and have an expert in mind who can testify for you in the event the revenue says this machine is not necessary or this machine is not required for your business. Again, I repeat, revenue got no business to come and say this to people, but they do that. And therefore, we got a good basis to come and say revenue cannot come and dictate to us how to run our business. So this is in a nutshell on incentives, and perhaps I can do better by answering some of these questions that we have in mind. Yeah. So there are many questions already being posed. Zari, can they read the questions? Can the participants read the questions? Or only ask can? Oh, okay. That means I got to read out the question for you. Farizal, do you want to take over the questions and I'll do the answering?
Sarah, can. We've got one question here. If a company already installed solar panel for generation of electricity for resale, can it be considered as manufacturing of electricity? In
my view, yes, because it's a wide activity. Because the Canadian cases that we quoted was on hydropower electricity. The UK case was on nuclear power electricity. I don't see why solar powered electricity cannot be manufacturing.
Yeah. So in such a case, can a company claim RE when the company subsequently installed additional solar panel as an expansion to its existing manufacturing of electricity?
I think you can, but you have to just. I'm not as familiar as I am with hydro and coal power stations, because I've been there and I've seen how they operate. But assuming it is not a matter of just fixing the solar power, there are machines involved, there are processes involved in creating the generating electricity. Answer is yes.
Okay.
My view, answer is yes.
Next one. In order to claim for RA for machineries, must it be used, or is it sufficient to be capable of being used?
It must be in use. Because the language of the act is used.
Next one. Can a company qualify for RA on factory renovation costs if it only renovates existing premise for diversification exercise?
Answer is yes, because capital expenditure incurred on factory, plant and machinery for diversification purposes can be claimed. Because the language is factory, plant or machinery, it's not and machinery.
Next one from Mr. Bernard Fong. We have one subsidiary obtained ITA incentive by MIDA letter on 14th July 2015, hence eligible to claim 100% QCE for 5 years from 2013 to 2018. Can we rely on the latest case law development?
Mr. Bernard, answer is yes. because you have obtained a incentive for 5 years for whatever you claim during that 5-year period. Between 13 and 18, that amount you can claim ITA incentive. But assuming you cannot utilize them in that 5-year period, my view, based on the case we have won in court, you can claim it indefinitely. The 7-year restriction will not apply to you. Of course, IRB won't agree with you, but my view is you can. But please do your claims quickly or challenge it quickly, because your timeline will start kicking already.
Okay. Next one, does electricity generation from biomass falls within the definition of manufacturing for RA claims after year 2009?
My view is yes, because it doesn't fall. It is not a precluded activity.
Okay. So why generation of electricity subject to service tax if this is not provision of service?
Service tax is a different tax regime altogether. If I may put a counter argument to you, why is it then theft of electricity? There is no theft of service, but it's theft of electricity, isn't it? So why is it regarded as theft? So just because it's classified in service tax as such, it doesn't ipso facto mean it is a service.
Okay. We have a question from Chiam Tao Wen. How do you define the 7 years? It is now 2022 and the audit of financial year ended 31st December 21 is in progress. When will be the first year?
The first year of the 7-year would be during the period of the upper-earning. It starts from the year of assessment in question. So if it is year of assessment 2022, then it's 7 years from now for document retention.
Moving on. Hi, Sarah. In the TNB RA case, where the IRB will appeal to the court.
Oh, they've already appealed.
Yeah. Next one. How important are project papers for RA claims? Are they really necessary? Can a businessman wakes up one morning and decide to acquire a machine that clearly modernizes operation and increase profits?
And the project paper is not a must. There are many cases we have done in the past and say it's not a must, but keeping it helps you when it comes to the later days, when it comes to showing why you incurred. Of course, the businessman can wake up one morning and decide to acquire a machine clearly. If it is so clear and you know about it, no issue about that. But I'm talking about when you make $1 billion claim or a $500 million claim, will you be able to remember all these expenses? You see, it is not like you go and buy a one machine. If you are claiming hundreds of millions of ringgit, say like TNB, they got power plants all over the country. So you must keep track of that, And I'm sure if I ask you what you had for lunch last Thursday, you may not remember. Right? So we can't even remember simple things like that. This kind of thing we take for granted. When income tax, the customs come after you, that is where the headache starts.
So not
a must, but it is helpful. But the documents must be well prepared.
The more you have it, the better.
Yes.
Yeah. We've got a question from Shyam Lakshmanan. Does the special commissioner tend to rule in favor of LHTN?
Not necessarily. We have won a couple of cases lately before the commissioners. So to say that we won a TP case recently, big TP case. So not necessarily, depending on case to case. Yeah.
Okay. Evidence from Chan Ken Fat. Is scanned document accepted in court in the absence of the original hard copy?
It is accepted, Mr. Chan. The Evidence Act has provisions for digital documents unless the authenticity of the document is questioned, and then you may have to produce the original or try to argue on that, depending on the circumstances. Is there a contest on the genuine, whether the document is being questioned or not?
Okay. Moving on, from Sally Kang, we have purchased new machineries and we have incurred costs on site preparation, such as electrical installation. Is the cost qualify for RA? Does the cost?
Yes, Sally, you can. We have claimed this in our earlier cases and we got it.
Another one, what about normal CA? CA, must it be used or is it sufficient to be capable of being used?
It also must be in use. Otherwise, everybody will buy all kinds of machines and say capable of being used, you know. So that cannot be the case. So the law is very clear. It must be in use.
Okay. From Alvin Achu. Can reinvestment tax claim be stacked over and above the tax benefits accompanying with pioneer status?
Then you must look at paragraph 7 of Schedule 7A, and I think you can't, because products that enjoy, companies that enjoy pioneer status will not be able to claim RA. There's an express exclusion for it. But Mr. Alvin, you can claim capital allowances on that. Yeah.
Moving on. Can a Section 131 appeal be filed if a taxpayer is currently undergoing tax investigation, not yet concluded? This covers that there are certain expenditure omitted from the claim.
Well, you can claim, provided it's within 5 years from the year of assessment when the expenses has been incurred and omitted. So 5 years, a 5-year time frame, you can claim.
So if you file, does it prevent IRB from issuing notice of additional assessment under Section 91?
No, it doesn't. They're two different things. Your 131 is to go and claim for what you have omitted, where you have overpaid tax. 91 is for them to collect more taxes from you.
Incidental costs for installation and setting up of plant and machinery. Assume that the plant and machinery qualified for claiming RA.
I answered this earlier. Ang answer is yes, it can be claimed.
Mervyn Ong, can the same argument on no time limitation for RA incentive claim but not utilized within 7 years be applied to unutilized business losses prior to year 2018?
Answer is yes, Mervyn. You can apply the same argument for unabsorbed losses as well. Unutilized losses, sorry.
Chiam Tao Wen. Company paid for a machine in advance by LC a month before it qualifies for RA, 35th month from commencement of business, but only takes possession of the machine a couple of months later. Does this machine qualify for RA?
Answer is yes. Answer is yes. You can, subject to you having a qualifying project, but the year you pay and the year you use the asset must be in the same year of assessment. Yeah, it has been the same fiscal year. Then answer is yes.
How do you define what the qualified project is?
Where is this? How do you
define what the qualified project?
Oh, that is under paragraph 8 of Schedule 7A. The law prescribes it.
Okay.
This is explained as if you undertake manufacturing activity or you take any approved agriculture activity.
Okay. Mr. Alvin, you mentioned that RA can be claimed together with capital allowance. Can the same be applied for qualified mining expenditure? And whether qualified mining expenditure can be claimed together with industrial building allowance over the same asset?
RA, I'm very clear you can, because the law doesn't say you can't. On the second part, there's an interesting question. I never come across this before. Can you claim qualified mining expenditure against IBA? I can't give an immediate answer, Mr. Alvin, but unless I'm wrong looking at the law. But if you ask me, for my recollection of the law, I don't see there being a restriction, but I'm not very sure on the second part. Yeah. First part, I'm very clear. You can claim RA despite having mining expenditure, but whether can you also claim IBA, I'm not very certain, but to the best of my knowledge, I think you can, but I'm not certain on that.
From an anonymous attendee, we noted that the company has to surrender the investment tax allowance before claiming RA. However, the PR or Act did not details on the surrender of ITA. wish to seek further clarification on the surrender of ITA. The ITA must be surrendered within the same basis period to claim RA.
I think so too, same year. You know, if you want to claim it, yeah. You can't claim both in the same year.
Can RA be claimed on the assets during trial production run?
Well, if you've already commenced your business, if you already got, especially if you got, your case is even stronger, if you already got sales, I think you can.
Okay. We've got no more questions. We've got a few here.
Yeah, we got some questions in the chat box, you know.
Chat box. If a company already installed solar panel, I think this one is already answered, right? From Mr. But okay. Can company claim RA together with Green Tech ITA, solar panel for manufacturing activity in the same year?
Unless the one or the incentive says you cannot claim, they're mutually exclusive, you can claim for both. Unless it's like pioneer status and ITA is expressly precluded. If there's none, you can claim both. Mr. Alvin has another question here, Farizal.
At the bottom. Thank you. Very lucid. Perhaps one more question as a follow-up on your previous advisory on a separate note. Has IRB come with any guidance as the new definition on plant for qualified plant expenditure?
None, because we are the only silly country in the world Commonwealth has got a definition of manufacturing. So none, and I think it's a silly definition they've given.
From Sao Lele, can civil and structure expansion work costs for the new machinery, which is also qualified for RA, can continue claim for RA? Can you continue? I think the question is, can you continue to claim RA for this? Right.
Yeah, I think you can. I mean, if we can tie it back to a qualifying project, Lele answer is yes.
Okay. I've only received the approval from MGTC in year 2022, but the cost incurred was in year 2020. Can I claim GITA incentives in year 2021 tax filing, or should submit revised tax computation for
it
year?
It depends. Your approval in 2022, which you received, is for which year? If it is for 2020, of course, you can claim, do a revision, or your OPay taxes go and do a revision and submit. But you're not clear here in which year you got the approval. You received the approval this year, yes. But is the approval for this year or the earlier year? I think that's where you need to alert us. If it is moving from now only, then you can't claim for 2020 and 2021.
From Chian Lung Yung, can GITA and RA be claimed in the same year?
What is GITA? Green Investment Tax Allowance. Unless one of the incentives disallow reinvestment allowance, you can claim both.
From Garrett Quid, the company purchased cabins to rent it out to tenants as portable living spaces located at the tenant's working site. Upon the completion of work at the construction site, the cabin will be removed and collected back by the company. So a company purchased cabins, okay, can claim CA on the cabins?
Oh yes, there's a Singapore case on that, ZF if I'm not mistaken, that says that portable cabins at a construction site are all eligible for capital allowances. Okay. A nice Singapore case on this point.
From Look Me at the chat box, installation of high tension for the company, what types of incentive can claim?
For normal car, I mean, what is your business? Are you in manufacturing electricity business? If yes, you can claim. If you're not, then you can't claim.
From Nita, can IRB challenge or audit tax incentives claim for years of assessment, which is already time barred?
Oh yes, of course they can. In fact, it's a very common occurrence now.
Hi, Sarah, how aggressive the revenue is on RA tax audit these days?
And there are not that many RA audits except for, but it's coming back now. But they are aggressive. You can see from the TNB case, it's a 1.8 billion ringgit tax bill. So they are very aggressive.
From M. Ahmad, would R&D machines considered plant and machineries and qualify for RA claim in manufacturing activity?
Oh, yes, you can. We have done these cases. Success Electronics, the R&D facility was eligible for reinvestment allowance.
Ang Leong, are incidental costs for installation and setting up of plant and machinery issued that?
Yes, we already answered this earlier.
Yeah. Installation of high tension can claim RA or CA only?
I think I answered this. Depending on your business, what is your business?
Yeah.
If you are, in business of manufacturing and selling and distributing electricity, the answer is yes. So it depends on the business you undertake.
I'm impressed the way you answer yes or no, yes or no. Is the process of bending and joining by welding or using precision machinery of metal plate to become round shape or pipe. Consider new product. Qualify the definition of RA.
We need more info, but it is not a precluded activity. But what are you so you're actually shaping these, you're not manufacturing, are you? You're just shaping them. You bend and join them. So is that if you have a manufacturing license, ND for your business, it's easier to show. But if not, it can be a bit more challenging.
From Sir KC, is commissioning of machinery meets the requirement that the machinery is in use for RA purposes?
No, it must be in use. Commissioning is not used yet.
Sorry, Sarah, may I have the answer for Kok Hui Chua again regarding solar?
Whether solar can claim, is it? Answer is yes, subject to you meeting all the qualifying activity requirement and all the other requirements under Schedule 7A.
Okay. Do Pioneer from Kit Kyong Yong, do Pioneer Investment Tax Allowance has its own non-application clause?
I don't think so. Under the Promotion of Investment Act, there is no general clause like that, but the minister is empowered to impose it on you. The law allows the minister to impose the conditions on your approval letter.
From Tam Yok Mei, if the machinery takes 3 years to complete and only put in use in 4th years, then the company only can claim start 4th year onward?
Yes.
For Gita, which is approval under 127, sub 3A, no non-application clause was mentioned in the MOF approval letter. Right. So it's safe to say that the Gita for this particular case do not have non-application clause and only need to refer to the non-application clause.
Yes, that's my view.
Yeah. Moving on from Siu Moi Karen Ong. It is mandatory IRB will conduct RA audit for all taxpayer claim RA?
It's not mandatory, but in the past it was very common for them to audit clients.
This is the last one from Ang Leong regarding Gita on solar system. There is one condition in the approval letter on additional manpower for qualifying project. Does that mean that additional manpower incurred for installation and setting up of the solar system, or does it mean the additional manpower for whole manufacturing process?
Well, I wouldn't be able to comment on how you manufacture your product or you do your product because I've not been exposed to that. But thinking aloud, as long you incur expenses for the for the manufacturing process, then you'll be able to claim the expenses you've incurred for the installation and setting up of the new place, but not that you can claim all the incentives or the traditional CA or IBA or RA. You see, so it all depends on how you want to do it. So if the condition is purely installation and setting up, I think you're all right. But I don't think the additional manpower, the labor you pay, you claim a deduction. Because that's a business expense for you.
Okay. Back to the question box. what resource or defense do we have if IRB is requesting RA or ITA documents from before 2012, more than 7 years?
Oh, you got to politely tell them, listen, I don't have it. I'm going to get this, what is that you're looking for? So you got to politely tell them that, you can't ask for the impossible,
There's another one. With the definition of manufacturing in Schedule 7E, which took effect from year 2019, can a solar plant owner qualify for RA claim for year 2019 onward on its plant expansion?
Yeah, I think so too. Did you make any income during the trial run period or just purely no income? I think my thinking seems to be yes, you can. Why can't you not? You're not being paid, that's all.
Next one. Can share your thoughts on Practice Note 1 2022 explanation in relation to the definition of factory for reinvestment allowance claims. It seems that IRB is limiting the claim of RA for storage of material space by narrowing the definition of factory.
Well, yeah, this is warehouse, isn't it, Farizal?
Yeah. Storage material space.
Well, you can claim IBA for warehouse because there is a provision that says, I think 47C or 47F that says that if you build warehouse with a view of exporting the products later, you can claim industrial building allowance. There's an express provision for that.
Okay. Hi, based on the PR, the production commenced after a trial run of the install machine, which started on 1st June 2018. After the trial production period is over, which is 31st August 2018, the commercial production started on 1st September 2018. Therefore, the capital expenditure is deemed to have been incurred on 1st September 2018. However, you have mentioned the company is able to claim during the trial run period should there is sales. Any way to support this?
Because logically, I wish to commence a business, right? If you've done everything, you're running it as a show and you're at a trial run, you have product, and what do you do with the product? Do you sell this product or are these trial run because of the regulatory requirements? If you can establish that clearly and say we got to do it, because this is all part and parcel of our business. We already commenced business, full staff, they're being paid. They need to, I think that's the basis to go and come and say, we can claim it during the trial run. So it all depends what was done during the trial run,
So
to what extent your trial run was active? Did you have other products that were on sale?
So in relation to this, I think when it comes to trial run, sometimes you may have you may produce products which may be sold outside. So
yeah, for a very cheap price.
Yeah.
At least Farizal sold at scrap, especially assuming it is steel or whatever. What are you doing in this product?
No, what if the products that they produce do actually have the value equal to the product that is produced after they actually start commercial production? What would that?
What do you do with that? Do you sell it or do you just keep it and throw it away?
If you sell it, because that product has value, it is
you sell it, you bring it to tax. You bring it to tax.
Sorry?
If you sell it, you bring it to tax. If you sell the product because it has some value, you bring it to tax. For example, you got to pay tax on it.
Yeah. Okay. Moving on. Last one. Industrial building allowance. Warehousing services is provided by a taxpayer to its client, one or two only. Can the warehouse rented be considered as the hire of storage space to the public and IBA be claimed?
Well, you can do that, but you can also try to explore whether on its own can it be, whether it's a factory or not. Let me just see 63, para 63 for you. It's all interesting. We've moved away from RA to warehousing, Definition of paragraph 63. Yeah, well, you can, or mainly consists. But is that your main business consists of mainly? I think you can. I think you can, looking at the language use. Looking at the language use, I think you can. And don't forget paragraph 40, section 42F, to see. That says that if you have a warehouse and for export, you can also claim industrial building allowance.
Okay. Next one from Ng Kian Pian. We installed new machine in 2020 for expansion. However, due to pandemic, no sales growth, but expect to grow 3 years from now. Can we claim RA in 2020?
Yeah. If you have expanded, you have capacity to expand, by not manufacturing the full capacity or not making that money because of certain reasons like this, it's all right, in my view. Because business is, go up and down.
Okay.
It doesn't mean you cannot spend money or cannot run your business in a smart way.
From Mr. Ang Leong, regarding the JITA on solar system, there is one condition in the approval letter on additional manpower for qualifying project. Is that mean that additional manpower incurred for installation and setting up the solar system? Or I think you've answered this, right?
Yeah, I think I answered this.
From Fang Yu, can the application for relief under section 131 be filed if there is a tax investigation ongoing?
Yeah, I already said this. Answer is yes. They're two different things. 131 is they're going asking for a refund, while investigation is them checking you whether you've done things properly or not.
I think that's it, sir.
That's all then, huh? No
that's
other. Yeah, perfect timing. We have started.
Yeah.
So I just wrap up to say that incentives are always will be under challenge, especially large incentives. But please ensure that you keep your records smartly. Please feel free to contact your tax agents. Of course, always contact us when we can guide you on this.
Okay. Thank you, Sarah, for the wonderful session.
Thank you.
Yeah.
And I think I saw one final question just now.
In
the chat box. Question should be in the we claim RA when assets are in use, but clawback refers to date of acquisition. Would check to confirm clawback refers to invoice it or start using. My view will be using date because that's the year you start using. That'll be my immediate view, Catherine. I'm going to look at the clawback provisions. And don't forget, friends, you can always email me the questions. We can try to answer any help you need in coming to claim or reviewing your claim, especially if you are in power plant business, business of manufacturing items that you thought you cannot claim. So I hope the TNB case gives you an idea that you can claim and save lots of money. And of course, you can always call Farizal and myself to help you with the documentation so that you can keep and claim them nicely. And don't forget, for our next session next week, my colleague is going to put up the poster now. Nothing on law, but please put it up. Nothing on law, but it is on the Women's Day. So you can see, break the bias. So how, women, in connection with International Women's Day, the firm always organizes an event. So this year there's a webinar from 3 to 4:30. A retired federal court judge is speaking. Justice Tan Sri Zainun Ali will be speaking, among others. We also got EY Women Entrepreneur of the Year speaking as well. So please feel free to join us and register and try to see what you can hear and see what are things we can learn from this conversation. And every 2 weeks from now, our Thursday webinars have started, and list of topics will be it's out internally, but we will share it on our social media. Feel free to join us in all our future sessions. On that note, thank you very much. And Farizal, thank you for moderating and helping me with the questions. And hope to see you next time. Thank you.
Have a good day, everyone. Bye.
Bye.